And welcome back to Dukascopy TV. I'm Natalie MacDonald. Rounding off the trading week, I've got Roberto Mialich of UniCredit on the line for today's forecast program. Today, Roberto will be providing his 1, 3 and 12-month forecasts for the dollar-yen. Roberto, the yen appears to be losing ground against a US dollar, showing an aggressive recovery. Yet you seem to be bucking at the present bearish sentiment on dollar-yen with a 1-month forecast of 103. Why is that?
Well, essentially, we think that this recovery of the Japanese yen we have seen in the last few weeks is mostly related to the hunt for safe haven and the emerging tension that emerging in the emerging markets. But we think that this process will be relatively short-lived. In a sense, we think that the Japanese yen will return on the offer side going forward, mostly on the back that we don't expect that the tension in the emerging market might continue, and also because we expect that the aggressive monetary policy by the Bank of Japan will continue.
While market insiders have commented that should this pair stabilize above 101 as you forecast, then sentiment could turn positive into the midterm. You've gone with 108 as your 3-month forecast, a figure not seen in the last 5 years. What needs to happen for US dollar Japanese yen to hit that 108 target?
Well, we can consider both the side of the dollar-yen pair. In a sense, we continue to imagine that the dollar will continue to benefit in the medium term from a better U.S. economic picture, the Fed continuing his tapering strategy, and higher yield in the U.S. On the other hand, as I said before, the yen appreciation is related to short-term issues we don't expect to continue in the medium term. So as long as we go forward in the year, we think that the picture for the Japanese yen will return to be driven by Japanese fundamental versus the US economic picture.
Given then the longer-term issues presently weighing on dollar-yen, emerging market turmoil negating Abenomics to say the least, walk us through your 12-month forecast of 112.
We don't expect that the yen has much room to appreciate it, given the current situation in Japan, and given the fact that the Japanese policymakers still need more inflation to come through. It's come through from hitting domestic demand or through imported inflation through a weaker currency. Does not mind in a sense, but we put in other words, we can imagine the yen to strengthen only if there is a prolonged and definitive return of global risk aversion that might derail economic growth worldwide. As we don't think that this will be the case, and we continue to have a positive and constructing outlook going forward for the global economic picture.
Thanks, Roberto. Think Roberto's on the mark, or have you got your own ideas about where the US dollar Japanese yen is headed? Well, then head over to the Dukascopy TV page and share your thoughts there. For now, though, it's goodbye from me.